David, as we parse the GDP data, the mystery here is getting to the next quarter. You have been out front on saying this is not sustainable. Why is this good news from the third quarter less sustainable?
Yeah, remember what had happened in the first half of this year. Companies really cut their inventories, and so by June and July, the auto sector was restarting with government aid, heavy government aid, and so that boosted the quarter-over-quarter growth rate. So the third quarter, which runs July through September, was better than the previous quarter. That's all we know from today's data. So then as you try to continue that into the fourth quarter, it depends on whether people are going to keep buying cars without the subsidy.
What do you think?
Well, October looks like it was weak, so maybe 9.7 million seasonally adjusted annual rate. So if you bought at that same rate all year long, you'd have something short of 10 million autos, which is way down from previous levels. So I think October looks like it was weak. Now, November might be better. We can see how confidence moves. Now, the confidence surveys that people do, those have been weak as well. And I think it has directly to do with employment, and that has to do with small business finance.
And you talked about small business finance, inability of credit. You've got jobless claims today soft, even with the futures up 7, oil up $1. David Malpass, do you stick with your 0% view for fourth quarter, this quarter we're in right now?
I've moved to 0 to 1, but I'm comfortable with the 0 to 1 range that we have for that. All that means is that you're going to not have the consumption bump. Remember, so July auto sales were way above June. That's what you're seeing in today's number. But clearly October is going to be a weak number, and so we'll have to see November and December. That will tell the tale.
David, Lawrence Summers speaks to the Economic Club of New York at 12 noon today. Really looking forward to that. I'm not sure if you're attending. What do you need to hear from Larry Summers?
I am attending, and I'm one of the two questioners.
Tough time for Secretary Summers. What are you going to ask him?
I want to ask him about the tax policy. One of the things, I think it's hard for Mr. Summers to change the regulatory policy on small banks. That's kind of set in stone. Washington wants to recapitalize the banks, and one way they're doing that is putting a very harsh regulatory policy onto small businesses. So they're set on that, I think. But changeable is their view on taxes. And so if I'm a small business, I don't want to hire workers because I'm worried about the tax rate going up next year and the following. So I'll ask him something along those lines.
How do we jumpstart credit demand among small business? That's 60% of job creation.
Now, I think the demand is there. Small businesses would like to borrow money and add inventory and add workers, but they can't because the banks cut them off. So the key thing here is for the White House to convene a little meeting, maybe bring Paul Volcker into it. He's been kind of excluded from this process, and ask the regulators, why are you cracking down on banks? Why are banks not able to lend? It has to do with mark-to-market, but also simply the Washington instructions going out to banks is that loans are too risky.
Well, David Malpass with us.